Hello, welcome to another session of economic discussion. Today we'll be talking about the various types of deficits. Now, why to even study about these various types of deficits? See, these deficits help us in evaluating whether the government is running its businesses properly or not, whether the expenditure that is incurring is good or not, whether the borrowing that the government is taking, whether it is for the right purposes or is it not for the right purposes. And for those of you who have studied it a little, I'm pretty sure you may have this confusion. What is the difference between budget deficit and fiscal deficit? What is the essence? What does it mean exactly? So today we'll be discussing all of that, and we'll be uncovering a few more stories while we are on it. So when we talk about it, the first thing that we will study is what are the components of the budget. That will lead to us to solving what are non-debt receipts or non-debt income, and that will finally lead us to what are the different types of deficits. Let's start. Now, first and foremost, what are the parts of budget? Now, when we talk about what are the parts of the budget, any expenditure or income that the government takes can either impact its assets or liabilities, or it will have no impact on assets or liabilities. What is an asset? Anything that causes a cash inflow into your pocket. For example, building infrastructure. What is a liability? Anything that causes a cash outflow from your pocket. For example, loan. Now, try to take example of loan. For you, is it a liability or an asset? For you, it is a liability. Why? Because when you take loan, interest goes out of your pocket. So, the loan is the cause for cash outflow. That is why for you, it is the liability. However, what about the bank? For the bank, it is an asset. Why? Because it puts money into the pocket. It puts cash inflow. It causes cash inflow, which is why if the cash inflow stops coming, that type of loan for the bank is called as non-performing asset. I hope this is clear. So, a loan that the bank gives is a liability for you, but it is an asset for the bank. So, anything that does anything that puts money into your pocket or takes out of your pocket is anything that causes money inflow or anything that causes money outflow is impacting asset or liabilities, and anything that does not impact your asset or liability is what we call as revenue budget, or that will be what will be included under the revenue budget. For example, the salary that you give to your housemaid, that is a revenue expenditure for you, because that salary does not impact your asset or liability. At the same time, if you are getting rental income from a house that you own, that is because of your house. So that will eventually become part of your capital budget. Or if you sell your house, the money that you will get from that asset will be part of your capital budget. So anything that impacts assets or liabilities, it is capital budget. Anything that does not impact asset or liabilities, it is what is the revenue budget. Now see, so in budget there will be income and expenditure. So एक होगा revenue expenditure and एक होगा revenue income. In revenue income, for example, taxes, and revenue expenditure, for example, for the government, it is pensions. Similarly, for the capital budget, this gets impacted by the assets and liabilities. So, for the capital budget, there will be capital income and there will be capital expenditure. In capital income, some money will come through debt or borrowings. So, this is your debt income. And some money will come from your asset, or it will decrease your assets. This will increase your liability. This will decrease your assets. Because it is disinvestment. What is disinvestment? Government selling its shares in public sector undertakings. LIC, BPCL, Hindustan Zinc. So government is selling off its shares. Shares were an asset for the government. I hope that is clear. Number one. So capital income and capital expenditure, revenue income and revenue expenditure. Now, let's try to understand the second aspect, and that is what is total non-debt income. Now, see, what is total income? Total income will be revenue income by capital income. there are two types of budget and both have income and expenditure. So you add both the incomes and you get total income. You add both the expenditures and you get total expenditure. So what will be total income? Total income will be revenue income plus capital income. Now revenue income is anyway not debt because it does not deal with asset or liabilities. Debt is liability. So this is anyway non-debt. Capital income can be divided into two. Debt capital receipts, which is the borrowings, and disinvestment on auctions, which are the non-debt capital receipts. I hope that is clear. That is what we have written as well. Debt impacts asset and liabilities. Therefore, it impacts only capital budget. That is why this is anyway debt. This is anyway non-debt income. So therefore, what will be the non-debt income? You exclude the debt income and you add these two. So revenue income plus non-debt capital income becomes non-debt total income. Please remember this because this is going to be useful towards the end of this session. Now, moving on. Next, now let's start with what are the different types of deficits. Let's trace the journey. See, one of the mistakes that you guys do when you study is that you don't try to catch the story. You only want to know the final answer. If you know the story, reaching to the final answer every single time becomes easy. Otherwise, these deficits, you must have read it somewhere or the other, but you will forget about them. Why? Because you would not have read them through a story. That is why knowing the story helps you retain stuff. Otherwise, it will be just rote learning. So, anyway, let's try to understand the story. Let's try to understand the consequences. Let's try to understand the situations that were there which led to all these types of deficits that we have today, because they have had an evolution. So let's try to understand the evolution of these different types of deficits. Now see, so in 1950-51, just when we got independence and we started the budgeting, we had two types of deficits. What were those two types of deficits? First, Article 912, which talks about the annual financial statement, that mandates that you need to show revenue expenditure separately. That mandates that you need to show revenue expenditure separately. What is revenue expenditure? This part. Of all the things, it expects you to show revenue expenditure separately, which is why the government thought that we anyway have to show revenue expenditure separately. Might as well show revenue income also, and that is why one of the first deficits that we started to show was revenue deficit, which is nothing but revenue expenditure minus revenue income. Now, what does this deficit show? If you remember, revenue expenditure means salary, subsidies, etc. And revenue income means what? Taxes. All these incomes are taxes. It means you have to pay more salary, subsidies and pensions than you are receiving as your revenue income. जितना इनकम नहीं आ रहा है, जितना टैक्स नहीं आ रहा है, उससे ज़्यादा तो आपका खर्चा है. फॉर अ कोचिंग इंस्टीट्यूट ट्राई टू अंडरस्टैंड, जितनी फीस नहीं है उतना सैलरी में देना पड़ रहा है. जितनी फीस नहीं है उतना सैलरी में देना पड़ रहा है. So obviously, what does this show? This shows that the government or the institution does not have money for day-to-day expenses. I hope that is clear, guys. So this is what is revenue deficit. Then see, the other thing was the government also had to show how much is it supposed to borrow in the coming year. How much is it supposed to borrow in the coming year, and how did the government show that? The government showed that through simple calculation. Total expenditure minus total income. Simple. And that gives us the second type of deficit, which we call as the budget deficit. I hope things are clear till here. Moving on, now over a period of time, what the government was doing, the government was showing budget deficit and they were saying that these are my borrowing needs. However, in 1982, Sukhamoy Chakravarty Committee was made. बंगाली बुद्धि घूमी, और बंगाली बुद्धि जैसे ही घूमी उन्होंने ये पॉइंट आउट किया क्या कि बजट डेफिसिट से सरकार अपना उधारी का पैसा कम कर रही है आर्टिफिशियली. द गवर्नमेंट इज आर्टिफिशियली deflating its borrowing needs because the budget deficit does not show true borrowing needs. And this is why budget deficit was criticized. An obvious question should come to your mind is, why budget deficit does not show true borrowing needs? Let's try to understand why budget deficit does not show true borrowing needs, and it is here that we will also understand what is the relation between budget deficit and fiscal deficit. Now, let's try to understand. For any government, what will be the total borrowing needs? The total borrowing needs of the total borrowing needs. Some borrowing needs can be projected. Last year इतना चाहिए था तो इस साल हल्का सा 5% बढ़ा दो, उससे ज़्यादा चाहिए होगा. So certain borrowing needs can be projected, which are included as the item borrowings, वो already budget में mentioned होती है. और कुछ borrowing need पता चलती है सारा total income और expenditure निकालने के बाद. अगर आपको याद हो, borrowings are capital income, तो ये income में include हो जाती है. Some we will get to know only after income and expenditure estimates have been made. और ये बताता है हमें क्या? ये बताता है हमें budget deficit. मतलब अगर हमें true borrowing needs निकालनी है, ये सिर्फ budget deficit सिर्फ उतना borrowing बताता है जो कि हम estimate नहीं कर पाए, project नहीं कर पाए. ये हमें final value से ही मिलता है. But हमें क्या चाहिए कि सरकार को total कितना borrowing का need है? तो projected प्लस नॉन प्रोजेक्टेड, एस्टिमेटेड प्लस नॉन एस्टिमेटेड होगा क्या? टोटल बोरोविंग नीड. और इसीलिए ट्रू बोरोविंग नीड्स होता है क्या? बजट डेफिसिट प्लस बोरोविंग्स, एंड दिस टर्म इज कॉल्ड एज फिस्कल डेफिसिट. सो व्हाट इज योर फिस्कल डेफिसिट? फिस्कल डेफिसिट इज बजट डेफिसिट प्लस बोरोविंग्स. स्टोरी याद रखना, बजट डेफिसिट ट्रू बोरोविंग्स नहीं दिखाता, ट्रू बोरोविंग्स कौन दिखाता है? फिस्कल डेफिसिट. Then see, so let's summarize. 1950-51 revenue deficit and budget deficit. What does revenue deficit show? It shows that the government does not have sufficient funds. The government does not have sufficient funds to meet day-to-day expenses. The government does not have sufficient funds to meet day-to-day expenses. And what does the budget deficit show? Budget deficit shows that non-estimated borrowing needs, which borrowing needs could not be projected. That is why we needed in 1982 fiscal deficit, and fiscal deficit shows true borrowing needs. And in 1991-92 fiscal deficit started to be shown in the government documents. Budget में भी दिखना start हो गया. अब देखो 1998-99 में वाजपेयी सरकार आई, new government came, the BJP government came. When the BJP government came, BJP government was getting criticized that your true borrowing needs are very, very high. BJP government was getting criticized that your true borrowing needs or your fiscal deficit is very, very high. So how did they counter that? They countered that by giving the argument that, yes, I agree that fiscal deficit is very, very high. But you also need to understand that a part of the fiscal deficit is because of the interest payment that I am making today. Interest payment is my expenditure, that is my revenue expenditure. I have to make that interest payment today because the previous government had borrowed the loan. That is why, because of the previous government, I have to make the interest payments today. Which is why, if you want to judge me primarily on my performance, you need to come up with a different metric which we call as primary deficit. And what is primary deficit? From fiscal deficit, exclude my expenses, which is interest payment, because this expense I am incurring due to the expenses, due to the loans taken by the previous government. I hope this is clear till now. Then after this, so now we have revenue deficit, budget deficit, fiscal deficit, and also primary deficit. Let's look at the last deficit for the day, which is effective revenue deficit. Now see what was happening 2011-12. Now 2008, global financial crisis had also happened. Since global financial crisis had happened, government had to undertake certain expenditures, and it was getting criticized. Why? Also because in 2003, FRBM Act was passed, and according to that, revenue deficit had to be brought down to zero by 2008. But instead of it being brought down to zero, it inflated. Why? Because 2008 we had the global financial crisis and गवर्नमेंट को खर्चे करने पड़े थे, तो खर्चे करने पड़ेंगे तो एक्सपेंडिचर बढ़ेगा, एक्सपेंडिचर बढ़ेगा तो फिर फिस्कल डेफिसिट और रेवेन्यू डेफिसिट दोनों ऊपर बढ़ेगा. अब इसके लिए गवर्नमेंट वाज गेटिंग हेवीली क्रिटिसाइज्ड इन 2011-12 दैट योर रेवेन्यू एक्सपेंडिचर इज हाई, योर रेवेन्यू एक्सपेंडिचर इज हाई और योर रेवेन्यू डेफिसिट इज हाई. रेवेन्यू डेफिसिट इज हाई मतलब क्या? मतलब यू डोंट हैव सफिशिएंट फंड्स टू मीट डे टू डे एक्सपेंसेस, व्हिच इज व्हाई द गवर्नमेंट पॉइंटेड आउट टू वन इंपॉर्टेंट थिंग. Government pointed out that a part of this expenditure that I am incurring is due to grants that I am giving to the states. Those grants, some of it also is used by the states to create assets. So please exclude that money which I am directly giving to the states, which is why grants to the states are excluded from revenue deficit, and that gives us what? Effective revenue deficit. For example, if revenue deficit is 10 rupees but effective revenue deficit is 0 rupees, it means the government is performing perfectly fine. But if revenue deficit is high as well as effective revenue deficit is also high, it means government really does not have any money for meeting day-to-day expenses. So these are the type of different deficits. Now, before we take leave for the day, there is another formula for fiscal deficit that you would often come across in the books, and I want you to understand that formula. And that formula is, let's see another formula for fiscal deficit. So fiscal deficit is what? Budget deficit plus borrowings. That is what we saw. This is the estimated borrowings. This is the non-estimated borrowings. Estimated plus non-estimated gives us true borrowing needs. Now budget deficit can be opened as total expenditure minus total income. What is this then? Total expenditure and total income can be capital income and revenue income. This is your capital income and this is your revenue income. And if you remember from the first slide, revenue receipt plus non-debt capital receipt. Non-debt capital receipt and revenue receipt is what is non-debt receipts. I hope this is clear. And borrowings and borrowings get cancelled. This is minus, this is plus. So borrowings get cancelled, which is how you get a new formula for fiscal deficit: total deficit minus total non-debt receipts. So this was today's session. I hope you enjoyed this session. Do revise this session. It's a very easy story, but if you start it learning through stories, that is how and why economics becomes easy. But if you don't learn it through stories, if you only try to learn it through facts, it will become difficult. And every year, every second year, 1 to 2 questions are asked. In fact, in 2025, 3 questions were asked from the topics that we have just done, which is what it makes it really scoring, guys. Try to study hard, try to work harder. We'll meet in the next session. Thank you so much.